Since there are 2 board members on the call, we'll have to call the meeting to order, and we'll call it to order at 10:04 a.m. on this wonderful Thursday, December 5th, 2019. Ooh, almost took us back a decade. So today we're going to cover the financial statements orientation. This is for all board members and ATAC members to become more familiar with our financial statements for our organization. I don't know that I can officially call us to order. I think it has to be one of you.
Oh, I'll call us to order then.
Okay. I've already begun recording just so we can get a jump on that. And
Okay.
for roll call, it looks like Liz and Paul are both in attendance.
Present, yes.
Thank you. Okay. I believe you both have to motion and approve the agenda for today.
I'll move that we approve the agenda as presented,
I second.
and we're both in favor.
Sounds wonderful. Nice and easy. Okay, so as we move into the bulk of this presentation, we're going to look at our financial statements one by one. I've added them to this slide, so hopefully they're easy to see. If not, they're also attached in Boardable, or I can pull them up as the PDFs on this screen. But the first one we're going to look at is our balance sheet, which, as we know, this looks at our assets for the nonprofit and then our liabilities and equity. This document here was created from our treasurer, so it's a really splendid document that helps us look at a snapshot of the month previously. So this is October 31, 2019, as of that date, I should say. And as we're looking at this, we're looking at that first left-hand column, which you can see starts with cash unrestricted, then goes into cash restricted. These are just our different account lines. Then we move to the next column, which is our operating account. The column to the right of that is the delta. So that's going to be the change in the operating account from the previous month to this month. So as you can see, if it's in parentheses, that means it declined from the previous month. And if it's not in parentheses, that means it increased. The next column is the board designated operating reserve. This account was created last fiscal year in 1819 for the board to have a chunk of money to kind of spend how they need, but also to reserve it in case there are any situations where we lose our funding. We will have a nice little nest egg. The next column is the delta on the reserve account. So again, comparing the current month to the month before, and if it's an increase or a decrease. The far right column is the total column. This looks at everything to the left totaled up. This is a formula in the spreadsheet, so it should always automatically total, but if there's any sort of discrepancies that we ever catch, please let me know, because this is a living, breathing document that can be updated as needed. The top half of this section is the total assets. So we're looking at the cash we have on hand between what we consider unrestricted. That doesn't necessarily mean we can spend it on whatever we want. It just means it sits in this account and we know that it's going to be spent because we get reimbursed for our contracts. So we spend all of the money on our contracts first, and then the state pays us back afterwards. So we consider that unrestricted, even though it's kind of not. So it's a little bit confusing there. And then the next chunk is our accounts receivable. This is another document that we'll look at further on in the presentation, but our accounts receivable is any money that we invoice for, that we ask someone to pay us and we haven't had it paid yet, but this way we can go ahead and account for it. So as we move forward, we know what we can be expecting for cash.
And Liz, just if I could just add, we went from a cash basis of accounting to an accrual basis of accounting. I guess it was last fiscal year when I started as treasurer, and it was specifically for this reason, so that we could see basically what monies were owed. When we were doing on a cash basis, it was like, okay, we have so much cash on hand, but we never really knew what was outstanding, what liabilities, what assets or potential assets were out there that we just didn't have. So this was, I know it's if you've ever run a business, accrual basis is sort of the just the standard operating procedure for most businesses, but for FAAST, it was not. We were working on a cash basis, which is, I believe, because that's how VR wants you to report it back. Is that correct?
That is correct.
Yeah, so we do have to have different financials, not the one set of books, but we can report it by changing the basis from cash to accrual based upon which report we have to fill out.
Thank you, Paul. So the next section is the other current assets. So this looks at the interfund. So any money that we're moving between bank accounts or our investment accounts gets logged as interfund. So you'll see that kind of increase and decrease as we go. The prepaid expenses is anything that we pay once, but it's for the entire year. So we go in and do journal entries to book those expenses throughout the year. So it's not just a lump sum. AFP and telework direct loans, those are part of our New Horizon loan program. These let you know what we have in assets, how much our loans are worth essentially between the two programs. And then our rescue payments is if there's any situation where a loan is about to default and we want to jump in and help them out. So we put money ourselves, FAAST, the organization does, to help those people who have taken our loans. I forget that term.
And so this is where when the loan committee gets together and says, you know, well, we've got a $10,000, in this case, $10,586 loan that is in jeopardy. This is where we actually see it on the financials that we're trying to do something and not just, you know, letting them default or not paying attention to this, or even if it does ultimately become bad debt, it's at least accounted for and we know how much is accounted for. So out of almost $415,000 worth of loans between AFP and telework, we've got $10,586, which is in jeopardy. So, which is a pretty good ratio. Sorry.
No, perfect. Thank you, Paul. The next item is our fixed assets. This is our office equipment, our furniture. So it's anything that we physically have. This number gets estimated by our independent auditing firm, which is James Moore and Company for this fiscal year and the last, I think, 3 or 4 fiscal years. So they give us that number and our independent CPA adds the journal entry into our book. So this is our number moving forward for this fiscal year of the assets, the fixed assets we have in the office here.
Does that include equipment that we have in inventory, like that we might loan out?
It does not include the statewide device loan inventory, no.
So where is that? I'm sorry, it just hit me that that's not really shown on our financials, and it's an asset.
So that goes back to the conversation we had at the October board meeting, which we said that James Moore doesn't consider a program inventory to be an asset of the organization. And that's something I think when they come, they're coming now in January, I believe it's the week of January 20th to do our financial audit, that we'll discuss with them because we will have an up-to-date loan closet inventory that we've been working on since the October meeting.
And are you not only doing a physical inventory count, but basically putting a dollar value to that? Or is it just, you know,
I know we've been doing the physical inventory. I do not know if anyone has looked to put a dollar amount to it.
Okay. All right, we'll look at that again.
Okay. So the next chunk is the other assets. This is looking at what is in our investment accounts. So you see we have the AFP investment account, our unrestricted investment account, and our telework investment account. The unrestricted is actually our board designated operating reserve. And you can see as they fluctuate month to month, this does encompass the unrealized gains and losses in this number. So you can see how the market has gone up and down. It's also a little bit confusing because we are pulling money out of those accounts to reimburse ourselves for the telework and AFP expenses month to month. We try to do it at the end of every quarter so that we're not pulling money out super often to try to let that money stay in there and build up. But if we do come into a cash flow situation, we are able to pull that money down on a monthly basis to reimburse ourselves. So all of those items add up to our total assets. The bottom half here is going to be our total liabilities and equity. So that AP description is for our accounts payable. So this is anything that we need to pay. So if it's a bill that I've marked in the system that we just aren't ready to pay it yet, that number gets totaled here. You can also see this is where our business cards are between our Chase credit card, which is a new bank that we started working with last fiscal year in order to get rewards and points on the purchases that we made. So that's why you see a balance there. The Regions credit cards, these cards are only held by Michael and myself, and we are phasing those out. We are just waiting until we get a couple of months where there are no credit card charges. Then the Regions, the P card stands for purchasing card. These were kind of like debit cards, but they had a little bit of restrictions on them so we could control what was being spent. That ended up being kind of a hardship for the organization because it was denying us when we were going online to buy assistive technology from websites that we wouldn't normally do that, which is again why we moved towards going to the Chase credit cards. The individuals in the office who have Chase credit cards would be our executive director, myself as comptroller, our deputy director, the director of operations, and then our I&A specialist, because he does occasionally go on public awareness activities and he uses his card for any travel expenses. For the enterprise account, that's just our enterprise when we rent cars, and then our other current liabilities, I believe, includes our accrued leave payable for the fiscal year. Then unrestricted net assets and restricted net assets. That is like a combination of all of the assets above to equal our equity so that it kind of balances out. We have the combo of this page is assets equals liabilities plus net worth. We don't really have like a net worth line item. So these are kind of the combination of the assets above to allow the total equities and liabilities total to equal the total assets total. Oh, we do have a net income line. I apologize. I said that wrong. Okay, are there any questions on the balance sheet?
The only other thing I'd note on here just for Liz is that on the bottom, if you're ever looking through these, it should have a quick set of notes for anything that's unusual. The reason why it's column headers and rows is if you want to call, I don't know, a specific line to your attention, like, I don't know, H26, it would, you're able to just follow it in the notes below. It also gives you an opportunity then later on in the year to go back and see the ebb and flow of monies and liabilities as they go throughout the year. So those notes they're like the footnotes on any term paper. They're actually more important than they appear.
Thank you. So the next statement that we're going to look at is our profit and loss detail by month. This one is a little bit overwhelming. I'm not going to go into every single line like we did on the balance sheet, but just this is page, I believe, 1 out of 5 on this document, and it goes further down, but these are all of the columns that you'll see in this PDF when it's presented. The far left is our account codes. That's what that's the number we use in QuickBooks. And then the description also describes what that account code means. Then we have every single month of the fiscal year where we break it out by the actual numbers that I enter in once our independent CPA has reviewed all of our numbers at the end of the month. And then our projected is to the right of that gray line. This gray line is going to move throughout the fiscal year as we report on these numbers. But our projected numbers comes from our cash flow projections, which is a document that the board approved back in August, I believe, of 2019 for this next fiscal year. To the right, you see our actuals year to date. So this is totaling what we have actually spent on this item. And then we have our projected year to date, which looks at all 12 months combined. And then you can see what our budget total is and then what the percent of the budget is. So this document helps us track if we are overspending on items or underspending on items and where we're predicting if we really know that we're not going to spend money on this until April or May. We don't have to worry that, oh my gosh, we're going to come under budget. We can expect that expense in the month that it is to be used. This first top half is looking at our revenue. So you can see we talk about our grants and contracts, which is our HHS, and our general revenue, which we call GR. Those are our two contracts with the state. And then we have our Step Up grant, which is through the University of Miami. Then we go down and we look at our donations. We break them out by restricted and unrestricted. So our restricted donations are anything that is given to the organization with kind of like a asterisk on them, meaning we want you to spend it on this. Unrestricted would mean you can spend it on whatever you want to spend it on. We also include miscellaneous donations here, meaning we don't know why someone gave us money. So we book it that way. And then we also include our in-kind equipment as both restricted and unrestricted. Occasionally someone will donate to us something like a used wheelchair or a scooter, some sort of durable medical equipment. So that's where we would book that line. And then our Amazon Smile account, FAAST, is registered through Amazon Smile. So if you pick us as the nonprofit, we do get just a teeny bit of money on that. You can see that we do sell advertisements in our FAAST Access magazine. So we do estimate trying to bring in $2,000 for that. We publish it twice a year, which is why you see $1,000 in November and in March. Our investment accounts, we're looking at those transfers. So what we're pulling down from the investments to pay ourselves back. And then the income that is coming in on our interest for our direct loans. So that's with the AFP and telework programs. And then we are looking also at just the plain interest income, that 4022, that's on our bank accounts. One of our reserve accounts for the NHLP program actually has interest that it accrues. So that's a little bit different than this interest income on direct loans. And then the closing fee should be reimbursed by any loan customers as they close their accounts, but it's an item here because we hope that we're going to have some accounts closed this year. We also note any miscellaneous income. That's anything that we had no idea why it came in, but it wasn't a donation. This here was from the FloridaTreasureHunt.com, and we found out that we had a few things that we never picked up on, so we got an extra $200 when we claimed those. Next, we look at our fee for service. FAAST has had quite a few conversations about what we can charge for our services. We've included this on the budget this year again in hopes that we can have conversations about either selling equipment that is donated to us. We cannot sell any equipment that we buy with state or federal funds. If we can charge when we go and do trainings or when we do AT assessments. Then we start getting into all of our expenses. We break them down by the state level activities, state leadership activities, and operational activities. This is due to the federal government through the AT3, which is the organization that oversees the AT Act contracts. They are looking to see where we're spending our money percentage-wise, and they want us to spend more money on the state level activities and a little bit less money on the state leadership activities, which is something that the executive committee addressed when we looked at that the budget for this fiscal year. And whenever you have time, you can look and see all of the different account line items on how we spend our money and how we categorize our money. Then the bottom of this is going to look at any of the loans that defaulted, any reimbursable expenses in case a staff member or a board member were to pay for something and then we ask that they reimburse FAAST, if FAAST were to pay for something on behalf of them, any disputed transactions, if something is fraudulent or anything like that and we need to dispute it, we mark it in that line. And then you can see our total expenses and then our surplus and deficit, with the deficit being in parentheses. Is there any questions on this big old document or comments?
No, this is a tough one to put together with all the making sure everything adds up properly. But once it's done, it's useful.
Mm-hmm. Okay, so then we will move. The profit and loss summary by month is more of the document that I would say you use, Paul, in our executive committee meetings. It's a snapshot of what we just looked at. It combines just that 1 month, so you don't have to look at all 12 months of the year. And then it shows you what the actuals were for October, what the budget amount was for that month, and then the variance if it was favorable and unfavorable. So unfavorable is going to be in parentheses. And then this also gives me an opportunity to write notes on these documents as well, to try to let people know what happened or why we were off or what the miscellaneous income was and things to that effect. So I don't think I did include all of them. This is just looking at October again. I'm not going to go into great detail here because it looks at the same items that are in the profit and loss detail by month. Our next document is our accounts receivable. This looks at those invoices or those amounts that we have asked other people to pay us and what we can expect in the income coming back. We carried over some accounts receivable from the previous fiscal year, which was that $295,579.07. But then I tried to break out what we're going to receive by the different funding streams. So you'll see from Voc Rehab that we have our HHS and our GR funds, and then from University of Miami, our Step Up funds. Step Up usually ends up looking a little bit lower because by the time we have sent the invoice, they pay us in the same month. So it's almost like a difference of the two invoices that end up being in this account line. So it looks a little bit strange. Donations are here. If the board or staff have to reimburse us, they get noted here as well. And then any fee for service and miscellaneous invoices that we have to post. This throughout. Oh,
I'm sorry. The board reimbursement line, has that been paid in the month of November?
I believe if it's negative, that means it was paid. So it was paid in October. I think it's how this document works. So if it's positive, that means it has been invoiced, and if it's negative, that means the funds were received. So they go against account receivable.
Okay. All right. Thanks.
That is a very good point. You can see if we ever have positive charges for those board or staff, that will show what we have outstanding invoices waiting to be paid. So the next set of financial statements is what comes from QuickBooks, which is the accounting software that we use. This is the official report that gets downloaded from that. It's not necessarily what you see because we don't mention those unrealized gains and losses on our investments for this year. So that is just a major difference that you'll see in the profit and loss. But this is how it looks. It's called the management report in QuickBooks. Here you see the profit and loss, and you will see under investments, under income, the unrealized gains and losses. So that kind of throws off our income because it's not really actualized. It's just what's in the account that we have not drawn down or made funding off of.
So there, the accountant still wants to report it that way, huh?
Yes, the accounting firm, our independent accounting firm and our auditing firm says that it has to be accounted, that we can either wait to the end of the year or do it every month. So since we pay our independent CPA every month, she goes ahead and does it every month, and then we don't put it in the PDF documents that the executive committee gets.
Right.
You still receive this one, but it's not in the reporting that the treasurer does.
Right. Okay.
And then this is what the balance sheet looks like when it comes out of QuickBooks. The profit and loss summary by quarter. This is a document that the board and executive committee get only at the end of the quarter. This is for last fiscal year of 18-19, so you can kind of see what the whole year looks like. It just lets us know which quarters are we really spending more or spending less, which is really helpful because for our VR contracts, we only get reimbursed by the quarter, which can kind of end up being some issues with cash flow, especially if we overspent on those invoices because they reimburse us set amounts each quarter. So we can spend, $50,000, $100,000 over what they're going to reimburse us because we know the next quarter we're going to be way, way under as long as it equals the contract amount at the end of the year. So this is a great way to see when those quarters are that we can expect we're going to have a cash flow situation and which ones are our heavier quarters and our more reasonable quarters. Okay, so the next item on the agenda is the annual budget. This is the document that the board receives. This comes out of our treasurer report document. It has the account numbers and the descriptions as well, and then we can look at the fiscal year of 17-18, the budget for that year, and then the actuals. And then we go to our most previous year, which would be 18-19 with the budget and actuals, so that the board gets 2 prior fiscal years to kind of look at where we were spending that money. And then we have the proposed amount there. This is actually approved, as you can see at the top of this document. So I need to go back and change that proposed line to approved. And then you can see the percent change. So this lets us know how much it changed or is going to vary between what we did last year and what we want to do this year. And then it breaks it down by quarter and then by month. So that's just the total on the proposed budget divided by 4 or divided by 12. And then the item on the right is the notes to kind of give an explanation of how we got that money or why we're using that amount. And it also describes up at the top there the revenue for the grants and contracts on what year we are of this contract, just to let the board know that we should start expecting that in a couple of years this contract is going to go away, or maybe it needs to be renewed and that sort of thing. And this is a 4-page document as it goes through all of the revenues. And then you can see this is the first year that we broke out the salaries from just operational to documenting them for state level activities, state leadership activities, and operational. So you can see in previous years there isn't any salaries charged to the state level activities section. That kind of makes us look a little bit weird, but we broke it out that way again so we can say how much are we really spending on these state level activities, including our staff time. Here are our state leadership activities. Again, the salaries aren't there. We also added additional line items for the Family Cafe Conference because when I came on board here in February of 18, I was noticing that we were spending quite a significant chunk of our dollars on attending this conference, and I really wanted to know what that looked like. So we added it into the budget so we can better predict moving forward what we're going to spend to send staff to this conference every year. The board expenses are also in state leadership activities. You can see them there under technical assistance, starting with line 5003. This looks at any travel, the insurance for the director and officers, and also any professional development or contract services that are accrued by the board or predicted to be accrued by the board. The executive director travel is also there in our contract monitoring, which is any travel where we send staff to check in on our regional centers. Our operational costs, these are what we consider our overhead, so what we need to operate our nonprofit organization here in Florida. You can see that the contract services, the 5008, that's a big line item because we include a lot of little things and big things in that, which are described in the notes there. We also include our office equipment anytime we buy office equipment, which would be different than our assistive technology equipment. Any supplies, rent, shipping, those sorts of things are here as well. And then our operational salaries, which are based off of the allocation, which you can see in the notes section of which percent goes to HHS, GR, AFP, telework, and GA. And then you can see, again, the loan defaults, reimbursement expenses, and disputed transactions end up in the budget because we have actuals at the end of the year occasionally, and then the surplus and deficit. And then down at the very bottom there, you can see the HHS breakdown. So that is our federal funds, how the AT3 organization sees that we should be spending our money. They recommend 70% to state level activities, 30% to state leadership activities, and they don't mention anything about operations. So what we tried to do was I think our target was still 70% for state level, but then we took the operations chunk out of the state leadership and tried to do 20% state leadership and 10% operations. You can see we didn't quite meet that this year, but we hope to get closer to it next year. And that's only on the HHS funding. It does not impact the GR or any of the other funding streams. This is just for a reference for board members to go back. You can see here where we actually break down everything by HHS, GR, AFP, telework, GA, and step up. And then that top line where you see those percentages of 45.2%, 20.5%, those are how we allocate something if it touches all the funding streams. So rent, for example, uses this allocation rate. And it is based off of our salaries. That's how we do our allocation. Excuse me. It's looking at how much time is spent on each of these funding streams. And that's how we get those percentages. So if anyone were to receive raises, or if we were to add an employee or get rid of an employee, that would impact those percentages. Again, we're just looking through. This was actually PowerPoint slides that I used for our staff retreat this year to give staff an update on the budget, which I seem to think that they enjoy. I don't know if they actually do, but I went ahead and put these in this presentation as an opportunity for board members to go through and see really where our money breaks down. You can see for state leadership, some of it goes just to the HHS contract and some of it goes to the GR contract, but it's not very often that they go to both. And then operating activities, these are spread across all of our funding streams, aside from Step Up, because Step Up gives us an indirect 10% of what we spend on that contract to use towards operating expenses. And then this is more of a breakdown of that contract services line item, that 5008. So this is looking at a much more detailed overview of what we say is going to go in that line item and what we estimate. You can see that the independent CPA is here. I believe our financial audit is here as well. And then also some of those monthly expenses. Our consultant for the Step Up contract is here, Kelly Fontaine. And then we included our Nielsen grant operational expenses here. And then the strategic planning total that we were hoping to spend for the board to develop a strategic plan for the organization is here. And then we also include the NHLP contract services, which is the software that Eric uses, the Down Home Solutions, to track the loans, and then our Credit Builder Alliance credit reporting subscription. These are what we consider monthly services. These are the reoccurring things that we need to operate. They include our HR software, our Microsoft, our Adobe subscription, security system for the office, and storage units. We did actually get rid of the second storage unit under CubeSmart. That was something that we purchased due to the durable medical equipment that was donated to FAAST from Hurricane Michael, I believe. So we needed an additional storage unit to store it, but all of those items have since been distributed, so we no longer have that monthly account. Bitney Bose is our shipping. SRO is our purchasing software, so where we put anything that staff wants to purchase and needs to be processed. That's also where we store all of our receipts. It's a little bit of an expensive software, but it does a lot for us. And then Buffer and NAC have to do with the websites, and of course Intuit is our QuickBooks account, and ACS of North Florida is our cleaning services here at the office. The cash flow projections is the second document that the board approves when they look at the annual budget. This is where the profit and loss, those numbers gets pulled from for the projected amounts. For this year, since we had a full year last year using this document, I was able to kind of play around to see if we were really supposed to spend something in that month, but it should have been another month. So I've gone through and break down when we're going to spend our money or when we hope to get our money in. And then this document also has the projections on the far right for the total year, the budget, which is pulled from the budget spreadsheet, and then a check to see if it adds up between the projections and the budget. This goes all the way through. This is the total revenue on this first page. And then we look at the state level activities, state leadership activities, operational, and surplus and deficit. I do want to mention when we've talked about those state level and state leadership activities at board meetings, the big chunks of these items for state level activities is the device loan activities and the device demo activities. So when you look at the budget, those are pretty high numbers because that's majority of the services that FAAST seeks to give Floridians with disabilities and anyone else who's in the AT realm. So that's why those numbers are so high. The regional reuse centers are in state level as well. You'll see underline 5078 and 5077 between the exchange activities and the refurbish activities. Those are just paid at the beginning of the year to the regional reuse centers. Then you can also see the state financing. So any of the NHLP program stuff is state level activities. And then the salaries for that. But then when we look at the state leadership activities, this includes the second or the final two chunks of our four main core services. The final two would be training and information and assistance. So we break down our trainings here because the feds want us to spend more funding on transition training. 5% of our HHS funding should go towards transition training. So that's why that is a new line item on this year's budget. But training activities and information and assistance, as well as device loan activities and device demo activities, those four numbers make up the amounts that we give to our regional demonstration centers. So those totals end up being the 90,000 for each of the 6 centers. And we kind of adjust those percentages amongst the 4 year after year as the deliverables either increase for certain items or decrease, or if we put less of a value on them. So if we say an information and assistance activity was worth $5 for everyone you did last year, but this year we think it should be worth $3 because we really want you doing more device loan activities. So we're gonna bump up the cost of those device loan activities and decrease information assistance. That's just an example. I don't think that we did that this year per se, though we did adjust those numbers. I just wanted to kind of describe it to you a little bit. Our public awareness, so that's anytime we go out and tell other organizations and individuals about FAAST, that gets put into state leadership activities. It made it a little bit tricky this year. It's trying to squeeze it in that 30%. So we kind of had to say, we're going to be more strategic on what events we're going to pay for. We do have certain events listed in our VR contract that we will attend, so we can't get out of those, but what can we do more free events or more marketing to get a bigger bang for our buck? And then, as mentioned before, the board travel and anything related to the board goes in state leadership activities as well. So we didn't have any agenda modifications. So if there's any questions at this time, we can take those, or if not, we can motion to close.
I'm pretty familiar with the financials, so Liz has any questions?
I just really want to thank you for your time walking us through this. It's important, and I appreciate it very much. Thank you.
Great.
Absolutely.
I think did you have another date set up for this as well?
I did not for this one because I wanted to just make the YouTube video available. Okay.
All right, very good. So hopefully the YouTube video, we can get other board members to take a look at this. It really is an important duty of being on any board. So is understanding the financials and not just listening to somebody else talk about them, and hopefully being able to have people take a look at them and that they make sense, that things interconnect. I know numbers aren't everybody's thing, but it's really important as we try and plan and chart a course for the future. So with that being said, and there not being any agenda modifications, I'll entertain a motion to adjourn.
I will second the motion.
All right. Thank you, Liz, and Whitney, for your time. Really appreciate it.